All right, all right, all right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Thursday morning Inner Circle Live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody is doing well today, this fine Thursday morning. So we're going to dive in and get started. So, as always, let's turn off all distractions, grab a pen and paper for notes, and let's prepare to participate and engage. All right, so fundamentally, had a couple things happen overnight. We'll take a look at those, and then we'll dive into the charts, get an update on some of the setups that we posted in the Discord. Um, check on some that have been in positions in the that we've looked at previously, and then we'll see what else is happening out there. So, without further ado, let's hop over to trading economics, and let's get to it. There we go. And real quick, just drop me one in the chat if you can see my screen and if you can hear me okay. Appreciate you. All right, so UK GDP stagnates in February. British pound economy stalled in February following an upwardly revised 0.4% growth in January and below forecast of 0.1% increase. Contraction in industrial production and services sectors, namely in education, as teachers went on strike, were offset by strong growth in construction. The UK GDP is now estimated to be 0.3% above pre-pandemic levels. All right, so starting to slow down. Okay, things starting to slow down in the UK in different sectors for different reasons, but that's what we saw there. So that was the news that came in at 2 a.m. We also had China exports unexpectedly jumped 14.8% in March. And that was primarily it, right? Eurozone industrial output rise for the second straight month. But the UK GDP was the big news overnight. All right. And over to the Forex calendar for today, right? That was a GDP news. Later on this morning, 8:30, we got core PPI for the United States, and then Governor Macklem for the Bank of Canada will be speaking at 9 a.m. And then we got G20 meetings today. All right, so fundamentally, that's where we are. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself?
Doing pretty good, man. Another great day. Weather's warm. I'm all good.
Yeah, man. It's starting to turn for us. We go from winter to summer. We don't really have an in between. So I appreciate
For sure. That just means lots of yard work.
it. This is true. I'll definitely be out there this weekend.
For sure.
You see anything overnight, bro, from a fundamental perspective that caught your eye?
No, man. Just continuing to focus in on the Fed meeting minutes, right? So big time. They've really just scaled back, from the expectations of rate hikes, being aggressive this year. Um, because after the major bank issue and things like that. So the reason why I focused in on that, because it just continues to play into technically what we've seen on the weekly chart for the DXY, right? For the dollar, continuing its decline. So that right tip of the crown is playing out. At least it looks like it's headed for that support level. I know we'll take a look at that, but that's mainly what I've been focused on, is just the meeting minutes from yesterday that were released.
Yeah, for sure. Appreciate that, bro. And yep, we will take a look at that DXY. Over to it. Wrong one. There we go. And this is what we're talking about here, right? Pressing to the downside. We got a daily support level coming in here. And we're headed to it, right? After we break that, then we got other support levels as we make our way to the D extension, ultimately working to finish out that crown to the downside there. All right, so price is pressing to the downside, which means your dollar crossers and dollar pairs moving in the opposite direction, right? So that's where we are on the DXY, pressing down. Okay. Daily support at 12,743. All right. Yeah. So that's the dollar. Let's take a look at. I'm gonna take a look at this Aussie Swiss. These Swiss pairs have the Swissies picked up some steam. Did you see that, bro?
Oh yeah.
It picked up
Oh yeah.
across the board. So that was something that was interesting. Um,
Yeah. Because the you know, first of all, coming off of, the whole banking situation, it seems to at this point in time to have stabilized, right? We know that was a
yeah,
whole thing around credit Swiss, credit squeeze, or however they pronounce it. But they've also, said they've had no problem, right? And we know that we play this game with the Swiss franc, so they know that the policymakers they're saying they don't have any issue with intervening if they have to strengthen the franc, you
yeah,
know, because of the price growth, so that's playing into it as well.
got it, got it.
Yeah,
This makes sense.
yeah. So on-site deposits, fell in Switzerland for the first time in a while.
Oh, they
So
did.
yeah, yeah,
Uh-huh.
yeah. So that's because the thought, there is, when we talk about credit tightening and things like that, so those on-site deposits are declining. It shows signs that they're not cutting back, in regards to liquidity. So
Mm-hmm.
it's a few things playing into that. So it definitely got some strength out of the Swissy.
Got it. Well, that makes sense then. I didn't catch that one. Cool deal. Appreciate that. So
Yep.
let's look at this Aussie Swiss. Um, because all of them have been pressing in favor of the Swiss. So this Aussie Swiss on the daily, right? We're tracking down 618 retracement, right? Daily D extension here at 58,774 broke their previous support level, and we're headed to the downside now. Right, headed to the downside. So, right, that D extension comes into play there, along with that daily support level at 58,339. Okay, so it's making its way. Right, sequence plays out beautifully. Okay, it's taking its time. January, we started that move to the downside, and it hasn't stopped. So, come down to the lower time frames. Come down to the 4. This is where we sit on the 4. We do have an 80-20 scenario, but again, right, that Swissy's picking up some steam. So this is a scenario where we could potentially not see a retracement. We could continue to make our way to that D extension there. Right. I'm gonna mark out this daily level here. I'm gonna bring this down just so that we can see it on all the time frames. Just kind of get those levels in alignment, right? So that's the 4 hour, and that's our daily D extension here, right? So as we make our way down, could see price come into this zone and then potentially even push to that support level. All right. So we'll take that down to the 1, see where it falls in with the 1 hour. And the 1 hour falls in line in the same zone, right? So looking for that continued press to the downside here, likely getting to that D extension. We have 80-20 on the 4 hour and the 1 hour, but this could be one of those scenarios where we continue to run and press to the downside, right? So we'll watch it and continue to monitor. But just like always, right, if we don't get our confirmations, we'd have to break above this level to really get a deep retracement here. So we may not get that. So we'll watch to see. But that's the Aussie Swiss pressing to the downside. We'll see if we get a retracement of any sort. All right. Questions there? No.
Yeah, that's probably going to continue to show strength. And if they're intervening, that means that you know they're exchanging foreign currencies for francs,
Mm-hmm.
right? So they're buying up francs. So that's adding to that strong move in the Swiss right now.
Yeah, yeah. So I'm going to come over to the Swiss yen, right? And then this makes sense, especially with the weakness in the yen. So we're looking at this one last night, um, and we said if we break through these levels, we could head higher. And with that intervention and the weakness in the yen, right, we could likely see this not stop. Okay, so we could end up seeing this 151,618 level as price continues to press to the upside here. Right, so that's something to keep in mind. We talked about, right, the D extension here on the daily at 154,022 off of the 8-6 retracement, right? So we could see price continue to and ultimately make a new high, right, a new all-time high at 154 if that intervention continues, right? So this one likely will invalidate any of these scenarios on the lower time frame. So come into the 4, right? We got 80-20 scenario here as we broke through these levels here, weekly and daily resistance levels, right? And we're pressing to the upside now. Right? So coming in here, we might get price to stall, but we could see price, like I said, continue to rise. Right. So another scenario where price is just pressing through. And you see, right, we haven't gotten a retracement on any of these fibs really, right? Pressed up, continue to rise, no retracement here, continue to rise. So you hear Benny talk about a lot where you get runs on the yen, right, or a particular currency where intervention is happening and you don't get those retracements. This is that scenario. So being aware of that, right, will shift our perspective and shift our bias to say, okay, we'll allow these to continue to run, right? We'll allow them to continue to run, and we'll need multiple levels of confirmation for retracement of any sort, including support level breaks and that kind of deal, just to ensure that reversal is coming until we hear otherwise, right? So on this one, right, we didn't get we didn't get price to break back below this weekly level, right, and continue to push to the upside. Okay, so these are invalidated, right, until we see otherwise. Right. That makes sense?
Yes. I have a question
Yep.
also when you get one.
Yeah.
So I'm looking at, so when I do, when I mark everything out, of course I do the, monthly, weekly, daily, and everything like support. But I noticed like with the fib, I'm noticing that you're doing it on different time frames. Do you look at the fib? I normally just trade on a 4-hour fib. But should I look at the fib on every time frame? Is that just to get more confidence in the move to
Yeah.
see if it
So having the fib on multiple time frames, you're able to see, right, gives you additional points of confluence, right, or confirmation, right? So if you
okay.
have an 80-20 on multiple levels, right, could be a higher probability that we see
Gotcha.
that move happen, right? So you're able to get confirmation of your overall direction and look at some of those smaller waves, right? So on your 4-hour, you have these moves to the upside, but in these moves to the upside, you also have smaller ABCD waves that are playing out as you move down through the time frames, right? So
Right. Okay.
so you can play some of these smaller waves as price continues to move in the direction of your overall bias, right? So price has been moving to the upside here. So that's awesome that you trade on the 4. It's a beautiful thing, right? Some people trade on the 1 and they'll just play these smaller waves, right? So here, give you this view. So we'll copy this 4-hour fib, right?
Mm-hmm.
And we'll bring this down to your 1, right? So you see those smaller waves all inside of that larger 4-hour fib.
Wow. Okay.
Right. So you hear Benny say all the time, the lower time frames are just fractals of the higher, right? So smaller representations of the higher time frame. So same
Okay.
direction, but just smaller moves in between. right?
So is it, sorry.
No, go ahead.
Question. So is it possible, like, okay, I know that you're saying I can look at the multiple time frames to get, more confidence in it. Is it possible that because of the fractal situation that, say I'm trading on a 4 hour and for whatever reason I place a long, but when I look down at the, I don't know, the hour, it's in a wave or it's in a retracement or something, and so my fib plays out that I will be taking a short.
So you could
Does that
be in a retracement zone on a lower time frame, right? But your overall direction could still be right. So you see here, right? Overall price has been moving to the upside on the 4, but you've
right?
had this retracement here, and then price pushed up, right? Retracement here.
Okay.
So in these retracements, right? This moved down. Okay.
Right.
We link this to the 4 hour. We'll take it up. And that was that move there.
Okay.
Right. And then you got price to push to the upside. So here on this 80-20 scenario on the 4, you had a retracement on your 1 hour, which was a deep retracement. Right. And then price pushed to the upside.
Gotcha. Okay.
Right. So they're just smaller representations as these moves happen on the higher time frame.
And you can still trade those if you want it.
Absolutely.
Like if I still have my 4 hour, I still have a long that's going to be, a longer time frame for it to reach, because it's a 4 hour. If I go down on my, hour or 15-minute and I see that, oh, okay, here's a little wave and this one is a short, I can run those two at the same time?
You can, yes, right? You want to ensure, though, that whatever you do, you're consistent with, right? And if you're going to swing trade and intraday trade, we talked about this a little while ago before you joined us. But the recommendation is potentially having 2 separate accounts, right? Because it can get confusing in having those smaller trades, shorter term trades, and the longer term trades running in the same account.
Same
right?
account. Okay.
And you'll have more drawdown potentially on your 4 hour as that swing trade plays out, as opposed to your 1 hour where you're looking at shorter snippets.
Gotcha.
Right.
Okay.
So just something to think about there.
Thank you.
You're welcome. All right. So
I would definitely say 2 separate accounts.
Yeah.
That's the easiest way to go about it, right? One for your smaller intraday type setups, and then one for your swing trades. Because you're doing the work on the charts, right?
Yes.
You're putting in good work because you see the opportunities. And that's typically what happens, right? When you start to get to that point where you're really realizing what's going on, is that's one of the things that you start to see, is like, I see opportunities both ways. So I definitely recommend two separate accounts, because when you're talking about, especially if you're trading on the 4 and you're talking about huge 300, 400 pip moves on the swing, there's definitely going to be opportunities,
Right.
on the lower charts to trade those smaller, because it's going to move. It's not just going to move straight up and down, but 300, 400 pips or whatever. It's going to move in waves, So I agree with Ryan 100%. I would definitely recommend two separate accounts.
Gotcha.
Yeah.
Okay. Thank you.
You're welcome.
You're welcome. All right. So, so the Swiss yen, right? I was at 1 hour, push to the D extension there, broke through those levels, and we're headed higher. So we'll sit and we'll watch these Swissies, right? Especially the Swiss yen, and we'll allow it to run until it exhausts or the scenario changes whenever that occurs, right? So any questions there?
No, sir.
Cool deal. All right, sweet. So that's the Swiss yen. And then coming to this CAD Swiss, right? Another scenario where it's been just pressing to the downside, right? So this is another one that we'll just continue to watch. Been in this 118, 127 zone on the daily. We're pressing back down to the support level at 66,026. right? Similar scenario. Now, this is a new range that we're playing in, but we could also have the potential of maybe breaking the support level if that intervention continues and continue pushing to the downside, right? So as we come to our lower time frames, to the 4, right? That's the look there. There's that range pressing to the bottom of that range, and we'll see if that monthly level continues to hold up. Okay. And so down on the 1, see price just been pressing down, right? Every move to the upside, we get another press to the downside. Okay, so we have this 118, 127 zone coming in line with that monthly support level, right? And we'll see if it holds. If it doesn't, right, we could see price continue to press to the downside. Yes, ma'am.
Sorry, can you go back to the 4 hour? Because I'm looking at that actually on my own charts. And
yep.
Okay, so I see AB. So okay, it's consolidation there. So we haven't really established a D.
You know, so here on your 4, you got our AB boundary, right? We have this zone of consolidation. We haven't gotten a deep retracement on the 4, similar to the daily, and we're just hovering in this 118, 127 zone now, right? So now the matching D extension is here at 644.005, right? Because we haven't gotten a deep retracement. So that would be the extension if we break this level and continue down, right? Unless we get a deeper push here.
Have we identified C yet?
So what's the definition of your C?
So I thought that in this case, C would be the highest swing high in the AB boundary.
Correct. Your C is the deepest point in between the AB boundary. And currently, this is your deepest point. However,
okay,
right, we haven't gotten a retracement yet. So the question is going to be, do we, right, press to the D extension? If we do, then yes, this will be,
gotcha.
That will be your C, right?
Okay.
If, for whatever reason, we do get a deep retracement, right, then whatever that point is will be your C, right? So we're waiting to see what happens here. Do we push to the D extension, or does the tone change and do we get a deep retracement?
Gotcha. 80-20. Okay. Thank you so much.
You're welcome. All right. So that's there on the 4 and on the 1, right? This is where we sit. D extension just below that monthly support level. So again, you're welcome. So again, we'll allow this one to continue to press to the downside, right? And see where things stall and if we get some confirmation of a change in tone, all right? So that's the CAD Swiss. Questions on this one? Any other questions?
No, sir.
Sweet. Then Euro Swiss, same thing, right? If you look at it here on the daily, pressing down, right? We had a previous daily support level here that we broke, and we're pushing short, right? One of those few euro pairs that's going in the opposite direction, right? So it's coming to the downside. Next level is here at 97.061. Okay, there's our fib there on the daily, right? The extension is way out the way here at 91.941, coming down to our 4, right? On the 4 hour, it makes sense. 8-6 retracement, right? Playing out. The extension achieved there, waiting on the swing low to form. Okay. So 4 hour press to the downside. We'll allow it to continue to run. See if we get price ultimately end at this weekly support level. Okay. Now here on your 1, again, 80-20 scenario. But again, we could continue to see this continue to fall. All right. So allow it to continue to do its thing until we see otherwise. Okay. That's those. Let's take a look at this euro dollar. See what's happening here. All right, we press back up into this weekly resistance level on the daily, right? 618 retracement. So now the question is, are we able to break above this level and continue rising? Right? Ultimately making our way to the D extension, or do we stall at this level and give a pullback? Right? And with the dollar, we just looked at it, right? Pressing to the downside, coming into that support level. So we'll need a break of that support level for the dollar to continue to press in that direction. So coming here to the 4, right, off the 8-6 retracement, we're pressing long, right? D extension is here at 111. Okay, we'll need a break of this weekly level in order to get there. Okay, so this level is going to be key for us to pay attention to, right, and see if we're able to get that break above or if we pull back first, right? Or do we get a pullback first and then push and break that level? Okay, so coming down to the 1, this is where we sit on the 1 hour, right? This was the post on the Discord last night. So we'll see. Does this level hold in this 118, 127 zone off of the shallow retracement? Do we get a retracement first? Come back, retest this previous zone of consolidation in these daily support levels, or was resistance, right? And then press to the upside, or do we break above and just continue rising? Okay. So that's the look there on the 1 hour. We'll see which one we get first. All right. So that level is going to be key. We could get some consolidation before we get a decision. Trying to press down now, but we'll watch that to see. We're coming down to the 15, right? And there's our look with the cloud. Still a ways away from the cloud, but we're trying to turn over. Okay. So we'll be patient and see if we get price to break our cloud and then give us some confirmation to the downside. The cloud is the Ichimoku cloud is it was designed to be it's an indicator, right, to see things at a glance. And so how we use it as an additional confirmation point to where if we get price to break the cloud, right, and we have the cloud twist and show bearish in this scenario, it turn red, right, ahead, there's some confirmation points for us to get short in this scenario and take a trade to the downside. It's a confirmation point that we use. We do have a training out there. I didn't write the date down, but back in August, I believe we did a training on the cloud. We'll get that noted for you so that you can check it out. But we use it as an additional confirmation point. It's more of a flexible trend line, if you will, right? So the trend line is more rigid, right? And the cloud is a little more flexible, moves with price. So yep, August 13th. Thank you, Joy. August 13th is when that training was. Okay, it was a Saturday ritual. So that's how that looks, right? And it is a little slower, so you won't get the highest entry point, but you'll get the bulk of the move, right? And ultimately, it gives us that additional confirmation point for price changing direction. Okay, so that's how we use it. So we'll see, right? We'll see if.
Hey, Ryan.
Yes, sir.
Hey, we probably can add that like a link into the additional resources section for that.
Yeah. I do need to break that out. Let me make a note. I'll get that done by Monday.
Is the link to the what Benny did on YouTube in the Discord as well?
For that cloud training?
Not the cloud training. I'm sorry. It was a clip I seen that Benny did on YouTube, because normally I see the clips that you do, and I forgot the title of it, and it was
I got you.
Yeah.
I'll get that sent out. That was a couple days ago. He posted that. It is in the Discord. Yes.
Okay. What was the title of it? No worries. Okay.
Yeah.
I'll find it.
I'll find it for you. It was on 4-7. Price action moved sideways through my trend line.
Thank you.
You're welcome. All right. Great questions. Okay. Any questions on the Euro USD? We'll look to see if we get some confirmation of that move to the downside in that retracement phase. Cool. All right. Then I want to take a look at pound yen. All of these yens have really been running to the upside, right? So coming in here, here's that pound yen, right? Still pushing to the upside. We broke above this weekly resistance level, and it's pressing long, right? So we'll see what transpires here. Let me take this arrow off. Right? We'll see if we continue pressing to the upside here with that break, right? Next level is 169.099. Okay. As we move down through the time frames on our 4, right? Matching the extension on, pull this out, right? On the fibs running to the upside is here, 168.087. So this gives us an indication that we could continue running at least to this level, potentially test that 168.995 level, right? So we'll continue to watch this press into the upside here. Okay. And as we come down, right, we did have an 80-20 scenario here on the 1, the extension achieved, right? Price continuing to press to the upside. That one didn't play out on the lower time frames, right? So we're looking higher for price to press, right? Yens, similar scenario to those Swissies, with price in this scenario running against the yens, right? As anticipated. Okay. So another scenario where, right here, we'll sit tight and we'll allow the yens to continue to run until we see otherwise. Okay. So that's the pound yen. Questions here? I'm sorry. Yeah, pound yen.
No, sir.
Sweet. All right, cool deal. And then this pound CAD is still stuck in this range. Right. We got to the 382 on the daily, pressed up to this weekly resistance level, double top scenario, and now we're just stuck in this tight range here, right? Daily support, weekly resistance. So we'll see at some point if we break out to the upside and continue pressing long, or do we get another retracement and a press down here? So coming down to our 4 is where we have this 80-20 scenario, right? The price is still playing around in. We got a nice retracement here back to that 382 level, right? That was a great move, 269, 270 pips, right? And then we pulled back, and now we're stuck in the range. So we'll see if we get another move to the downside. We have to break back below this level that price has been playing at here, right? So I just left that previous daily resistance level in as price continues to play around with it. So we'll see if we stay stuck or if we're able to break support and continue pressing to the downside to get to that 382 on the 4. Okay. So stuck in a range right now. We'll see what happens with the CAD. Double top. Yeah, the double top confirms a level of resistance and a double bottom confirms a level of support, right? And yes, it could signal a change in direction. We don't have a training on that specific scenario. We don't. I'll note that though. Cool deal. Appreciate that. All right, so we'll see how this one continues to play out as if it breaks out of that range in either direction, or when it breaks out of the range in either direction. Okay, so that's the update on that one. Coming down to the 1, right? Let's look at it on the 1 hour time frame, similar to the 4. Okay. Benny, do you have anything that you have your eyes on, bro?
No, I just just continue to watch those dollar pairs, right? Watching the fundamentals play out on them.
Yeah.
You know, just developing, right? We know we've got the right tip of the crown on the weekly on the DXY. That dollar's moving down. So what does that look like for dollar crosses? Right? We should be looking at that. We should be studying that, right? Because it's a perfect, you know, situation where you see fundamentals playing out and how it combines with the way we teach the Fibonacci principles. Right. So like you look at something like the UCAD, right? And how, like, if you go to the UCAD on the 1 hour, right, we marked out the range from the higher time frame that it's playing in. So we hit the top of the weekly resistance level, and now it's moving down. But you can see on the 1 hour, if you run your fibs to the downside, you can see how that ABCD wave is playing out, right? Top of the range to the bottom of the range. Look at that. It doesn't get any better than that.
Mm-hmm.
Right? You've got a declining dollar. Fundamentally, we know why. Technically, we put it together with the right tip of the crown pattern on the weekly, and now you're seeing that play out across your dollar crosses, right?
Yep.
So it's those fundamentals that help you to, you know, stay confident in your overall bias. That's why we teach both. It's never just the technicals, you know, because what gives you the confidence to say when that price retraced in that AB boundary, right, all the way up, right, to that 4 hour resistance level, 134 pips, for you to say, you know what, I'm placing this short. That's my high price. I'm placing this short around this 61.8 level, putting my stop above the A, and I'm just gonna let it play. I'm gonna let it play out. Right. And you can see what's going on across the board. So like when we've been tracking for the longest time, like a NZD Swiss pair on the 1 hour. And you can see on the on that NZD Swiss, we mapped it out weeks ago for a 255 pip move, and it's right at the D extension. Right. So that risk was only 90 pips.
Yeah. Yeah. Appreciate that, bro.
Yeah. So, you know, that's just classic swing trading. I know we see a lot of things, you know, going on the internet and stuff like that, different strategies, but this is one that's just tried and true, right? That's lasted through the ages. No matter what people rebrand it, what they call it, right? These are just ABCD ways the market moves up, down, and sideways, and you can see where it played out. Right, those zones are very, very powerful. Right, that's a classic play. You had everything here. Right, you had an 80-20 that pushed price back up into the zone, and once it reached that high price, right, it turned over.
Yep. Man.
Right. So you're coming in at that. You're coming right in at that target. And that's on a 1 hour chart. That's over 250 pips on a 1 hour chart. It occurs all the time. It's just how you frame the market out.
And then allowing the market to do what it does.
Do what it does. You can't look at all of that whipping around that it did on its way down. You can't control all of that. You have to decide what type of trader, you want to be. Do you want to be in, picking trades off, on a granular level on the 15 or the 5 minute? Does your lifestyle allow for you to do that? Or do you need to have a sound swing trading strategy? Because there's several opportunities on, just let alone the 1 or 2 positions that you might have put in at the 61.8 or the 786 level, right? There's several opportunities to add to this position as it moved, right? We do our top-down analysis and it breaks through key support levels on the way down, opportunities to add to the position, but these are the major moves that we talk about. The UCAD was on a 1 hour, so it is a game of probability. You do your best to determine your directional bias. We combine technicals with fundamentals for that. And people would say, well, that's 90 pips. That's a big stop. That's all relative. Well, I won't be able to trade with a high enough lot size. You probably shouldn't be doing it anyway, right? And then that's all relative to the size of your account. So at a 90 pip stop, if you're risking 1, 2, 3% or whatever you want to risk, if that only allows you to trade at 2 micros or 1 micro or 3 micros, so be it, right? So be it. Let that trade compound. And then at the end of the day, figure out a way to add more capital to your account. Grind it out, right? Here in Michigan, we get, what is it, 10 cents per can, right?
Yep.
Whatever you have to do. I people that know me for a while, I have no shame. I have no shame. I don't care. I'm educated, have degrees. I have no shame. I don't care about titles or anything like that. Never have. You do what you have to do to change the legacy for yourself and your family. If you really want it.
Yep.
If you really want it. I remember growing up in Ohio, around where we would see 10 cents on the can, but in Ohio, you couldn't recycle for the 10 cents. We used to be mad, like, man, they must be lucky in Michigan. Now I live in Michigan. You know what I mean? So, whatever you have to do, and I always use that example with that 10 cents because you'll be amazed at how fast micro lots can add up if you know how to frame the market out and play the swing positions. It's tough trading micros when you're scalping in and out 2-3 pips, but this is different. Can we do all of that? Do we teach how to do all of that? Yeah. But when you talk about the basic, why we're here, what we teach fundamentally is swing trading. There's only certain zones that we trade. And you can see right here in this example, this is why. This is why. There's only certain, and if you use a smart trader, is mapping out the zones for you, the ideal zones to put you in the proper risk to reward ratio. That's why they have it red on the sell, green on the buy, where you want to see price come if you're trading with that trend. And you take the shots. So look at that. You already calculated your risk, 90 pips or so. So I already know what I can lose before I take the trade. I know we've said that a million times, but that is so important to your trading and your trade psychology. If I lose the trade, what can I afford to lose? right? So if you're trading, you know, you're risking at 10 cents. What is that? $9 for $25.50, right? Is that what that comes out to? Like $2.55 or something like that.
Yep.
You know, if you can consistently find those setups, you're not going to be trading at those levels and those lot sizes for long.
You won't.
You're not. But you have to be realistic. That's why we always tell people, you know, go look at what the average return is on the S&P. Go look at what your return is for your bank account. Can you beat that teaching what we teach?
Yep.
We have to move beyond all the hype and be realistic. Right? If you want to trade at those higher lot sizes and things like that, you're going to need more capital to stay within your proper risk parameters. That's the bottom line. And it takes some time to get there. That's why Ryan always say it, you know, set yourself a 3 to 5 year plan. 3 to 5 years is going to happen anyway. It's going to happen anyway, right? So are you going to work on getting consistent, right? And working on your trade psychology and mastering the strategy that works for you and your lifestyle? Or are you going to spend 3 to 5 years trying to flip accounts in 2 days and blowing money and putting yourself and your family at risk financially? That choice is up to you. We can't make that decision for you. All right? That Euro USD has moved out of the zone. I don't even know how many pips that is. You know, the EJ, you know, certain setups. But the risk to reward situations are there using the fibs the way we teach. Right? We post, you know, shorter setups and things like that because we know we have traders from all walks of life. But the bottom line foundation of what we do is swing trading, right? Major setups like this. And they take time, right? And we know that it could be boring. We know that it could be like watching paint dry, but we're not here for entertainment purposes. We never have been. We never have been, right? We're not here to say we flip $10 to $200,000 in 2 weeks. Like that's not what we do. And I know it may not be attractive to a lot of people, but we're not going to walk away from our foundation and what we know is right in regards to teaching people proper risk management and setting proper expectations. So we know that it's not for everybody, but it's for somebody who's willing to learn and do the work. So,
man, we said this year is right. It's about the action, right? It's about the action. We won't change. You got to take action to see results. You got to take action to see change. Well said, bro. Any question before we wrap it up for today?
No, sir, none for me. This has been great.
Appreciate you.
It's been fantastic.
All right, good people. Get right Thursday. Yes, ma'am. Let's get to it, right? Let's get to it. We'll be back at it tonight, 9 p.m. Eastern Standard Time for the Asian session with my awesome partner, Mr. Benny Allen. You guys have an awesome Thursday. We'll see you tonight. Peace.
Thank you so much. Have a great
Thank you.
Thank you.